Welcome back to the Nikki Clarke Show. I'm your host, Nikki Clarke, and I am so excited to be back again with another stellar individual, another transformational conversation, courageous conversations that share some incredible heart stories, some teachable moments. And we are back again with an incredible gentleman. So I would like to welcome to the Nikki Clarke Show, uh, Uchenna Opara. He's a financial strategist who has helped more than 50 Canadian professionals and entrepreneurs build what he calls a wealth shield, a strategy designed to protect families, businesses, and legacies from unexpected risks. Through four key pillars: life insurance, business protection, tax advantage growth, and living benefits, he helps people secure their financial future with absolute confidence. Please join me in welcoming Uchenna Opara to the show.
Thank you so much for the warm welcome. It's a pleasure to have you here. So it's a pleasure for having me on your amazing platform. And thank you so much for everything. Yes.
Fantastic. Thank you so much, Uchenna. Okay, so let's get into it. Tell us a little about yourself and what inspired you to work in the area of wealth protection and financial strategy.
Okay, that's a great question. So I'll give a little backstory to where I come from and the reason why I'm here. So I am from Nigeria and I migrated to Canada in December of 2018. And before I came to Canada, I didn't know anything about financial literacy. I only thought that because I was able to make money and save or buy a house, I was financially literate, but I was very wrong. Until I came to Canada, I quickly understood there was one big piece that was very life changing, which was understanding debt, like DEBT, and how to leverage it and the risks associated with leveraging debt. So when I came here, I quickly understood that, okay, this is something that is new to me, that I didn't really have a lot of it back home. So I wanted to learn how to leverage debt, learn the risks associated with leveraging debt, because the country is built on like giving credit facilities, giving loans and all of that, mortgages and all of that. And I wanted to learn how to use it properly before I start using it. So that was the beginning moment for me. Yeah.
That's amazing. And I love how you kind of, took a piece of your journey from Nigeria and you studied, what is going on in the trend of, financial movements. And you kind of made your own signature change and offered, this is what you offer to people. So I love that. So many entrepreneurs focus on making money, but not always on protecting it. So what inspired you to focus on building what you call a wealth shield? I love that.
Beautiful, beautiful question. So the main concept that inspired me to focus on wealth shield is something people always call the eighth wonder of the world, compounding effect, right? And why did that inspire me? No matter how much we are able to accumulate or have, if we are not able to allow that compounding effect take place over an extended period of time, we stand a chance of losing whatever it is we've accumulated by just one or two unplanned life events. So the whole idea of the wealth shield is centered around giving families and entrepreneurs that ability to allow whatever it is they've put in place or whatever wealth or asset they've put in place, giving it that opportunity to compound over the years, because that is where true wealth, or that is how true wealth is built, when it's built over an extended period of time. Yeah.
Okay. Yeah, like slow and steady climb. All right. You mentioned helping over 50 Canadian professionals in your bio and entrepreneurs protect their wealth. So what are some of the common risks people don't see coming?
That is something that is a very interesting question. So most conversations that I have are often centered around people saying things like, have it figured out, I think everything is good, everything is okay, which most of the times often ends up being not the actual situation. So some of the common risks people don't see coming. So I'm going to speak to two personas, right? I'm going to speak to Canadian professionals and also maybe entrepreneurs, right? So to speak to Canadian professionals in terms of some risks they don't see, most of the time Canadian professionals believe in life, a corporate owned or a group life insurance policy offered by their company is enough for them, right? In reality, on paper, it might look great, but the moment you get laid off from that job or the moment you try to switch companies, you quickly realize what's wrong with that process. You will quickly realize that, right? So that's one common risk I see people don't really understand until it's too late. So I was speaking with someone, a business partner of mine was speaking with someone 2 days ago, and she was a 69-year-old lady. So she had always been told to get life insurance. She's been working corporate for over 30 years. And she's always been told, get it. She's like, oh no, I have it. So finally, she was about to be retired from a company, and the company offered her, sent her a letter, and the letter said, because you're coming to the end of your time here with us, you have about 20 days to 30 days to convert this policy that you had with us to your personal policy. And the amount was $65,000 only. And the premium she had to pay on that was almost $300 because she was very old, the risk was very high, and then she was so bitter, so angry and all that, but it was her choice because of lack of proper information. That's on the corporate side. And on the entrepreneur side, one of the things that I see people don't see coming when it comes to entrepreneurs is, as an entrepreneur myself, it's very easy to take on loans like lines of credit, credit card loans, business loans to fund the business and all that. But it often takes time for people to protect that risk that they're exposed to. Because if anything happens while business is going on and the risk or the loans are still in play, no matter what, the government or the the government or the lenders don't care. Someone has to pay for that loan if anything happens. And when time comes, someone is going to pay. So those are the two major things I see entrepreneurs and Canadian professionals miss when it comes to risk protection. Yeah.
Fantastic. So you talk about the 4 components of a wealth shield. So can you walk us through what that means and why it's important?
Okay. So the first pillar is the foundational protection. Because just like we have in when we're flying, like we're on board a plane and we're going from maybe point A to point B, the air hostess or whoever it is makes an announcement. Please, in case of an emergency, put on your mask first before helping another person, right? So in any situation whereby there is someone that has loved ones around them or dependents, it is very crucial for them to first protect themselves. And the first step to protecting yourself is by taking care of who you are as an individual and protecting the risks that is associated with you. And those risks could be funeral expense, loans, car loans, mortgage loans, whatever it is. Protect yourself first so that people around you or your dependents don't get to struggle or inherit the problem rather than the blessing. Yeah.
Excellent. So let's do a review then. So the first you mentioned was the foundational life insurance. And can you just expand a little bit more about the step for families and entrepreneurs?
For families and entrepreneurs for foundational insurance, from my experience, there are basically 3 types of insurance. No one is good or bad, right? It all depends on the person or the individual and their situation. So, for example, if you have an entrepreneur that is looking to use or leverage life insurance to protect themselves from a business loan or a mortgage for their business shop or whatever it is, they could easily take out a life insurance policy like a term insurance to actually protect that risk, right? Then also, if they are looking to, the business is looking to cater to the capital gains that will be triggered on the sale of a business or an asset, you have to have like either a cash value policy in place to cater to that taxes triggered. Because if you don't, when the property is sold, either by the person losing their life or wanting to sell it off, CRO is going to come for the capital gains no matter what, right? So that is how that works on the entrepreneurial side. Then on the Canadian professional side of things, it would be much practical by simply getting your own personal life insurance outside of your corporate life insurance. Because at the end of the day, what you own is different from what the company owns. Because most people think they have life insurance through the company. No, the company owns it. You are a beneficiary and you're a subscriber to the company's policy. But if you own yours, you are actually the owner and you can choose your beneficiaries. In the company's case, they chose you as a beneficiary, so you can choose your beneficiaries. So that's how it works on both sides. Yeah.
Fantastic. All right. So if we can expand on the second component that you call the business armor, what does protecting a business actually look like in practical terms?
Yeah. That's a very beautiful question, and I'll break it down. So this ties to my previous point, but a business is simply an entity that is created for the purpose of making profit, right? And different things can happen when you're looking to make money or make profit. You can always take on loans, you can always take on credits, you can always have partnerships with people to be able to come together. So one of the various ways to protect oneself as a business owner is, first of all, if you're getting into a partnership, you want to have, there's something called like a buy-sell agreement, whereby the two partners have an insurance policies on themselves, whereby if one of them wants to get out or one of them unfortunately loses their life, the other partner has the opportunity or has the death benefit or some form of cash that is going to be available to them to complete that transaction. Because in a partnership where there's no life insurance in the buy-sell agreement situation, partners end up being stuck with maybe the family members of the deceased, which is often very difficult to work with, right? So that is one way. Then another way business owners could protect themselves is something called key person insurance. So what that simply means is, in every business, specifically I would say small to medium-sized businesses, there's often one or two people that are key persons that bring in the majority of the income. So what that means is, assuming that person steps away today, or the person is not able to work, maybe has an injury or passes away or whatever it is, the business will suffer. So to prevent that from happening, having a key person insurance in place enables that business to ride out the storm when unplanned events happen and just being able to bounce back without taking much of a hit. So those are the two main ones. Then another one I want to mention without taking too much time is disability insurance. And that simply is just giving business owners the opportunity to recuperate or recover if they end up having injuries while conducting their business without losing any source of income. Because as a business owner, if you stop working, most definitely you stop making money, right? So to prevent that from happening is where the disability insurance kicks in. So yeah.
Fantastic. All right. And you mentioned in your third component the tax advantage growth. So how can individuals grow wealth while remaining tax efficient?
Okay. The beautiful thing about Canada is they've been able to provide us with tax-free savings account or tax-sheltered environment, whereby you could actually grow your taxes and not worry about paying taxes, right? Grow your money without paying taxes, right? And from experience, there are two major ones. And the first one, which most of us know, is TFSA. That's a tax-free savings account. So you don't pay taxes on that at all. Then the second one is, which most people, or most people I speak with, don't really understand how it works, is a cash value life insurance policy. So how that works is, in the cash value policy, you have the ability to invest your money in whatever it is you want to invest in, and there's potential to make returns. So whatever returns you're making while it's still in that policy, it's tax-free. It's not taxable, right? The only time you might get taxed on it is if you decide to make a withdrawal from your life insurance policy. However, there are two better ways to get access to monies in your policy. You will either do a policy loan or a collateral loan. So that's how to build tax advantage growth without necessarily paying taxes. Yeah.
All right. And then let's go to the fourth component, liquidity and living benefits. So can you explain what that means and how it supports families during difficult times?
Okay. Most times, people often associate life insurance to when someone dies or passes away, and it's not always the case. There are a couple of living benefits that one could get while you're still alive. And one of the benefits is what I mentioned earlier, which I would also break it down. It's called being able to have access to monies based on what you've done in your life insurance policy. And that's where the idea of, for example, let's say I've had my policy for about I've had a whole life policy for about 7 years now. And for example, if something financially hits me hard, I have the ability to borrow money against my fund value. And I can do that without any credit checks. I don't need to show them an employment letter. I don't need to show them my credit score. I don't need to tell them my debt to service ratio like you would do for a typical lender that wants to borrow you money. So that just gives you the ability to borrow money or leverage those assets while you're still alive for difficult situations, and go from there.
Wonderful. All right, we're coming to the close of this amazing conversation, and I just wanted to ask you, what are 3 steps someone can start today to begin building their own wealth shield?
Okay. The first step is, I highly recommend to connect with a financial insurance broker, because what we do is identify risks and protect those risks. So connect with a financial professional to help you identify the risks that exist. And a good way of doing that is to conduct a financial needs analysis, whereby your risks will be identified and potential solutions will be recommended. That will be the first one. The second step will be to take action once you've figured out what the financial needs are or what the financial gaps are, and try not to procrastinate or do it later, because the best thing anyone could do for themselves is protect their families from any form of financial burden at every point in time, because no one has a crystal ball and anything can happen, right? Then the third thing would be being able to conduct regular reviews, right? Because some people, they speak to a financial professional this year and they don't speak to one in next 3 to 4 years, right? In those 4 years, a lot of things could happen. So I encourage people to have annual conversations or annual reviews with financial professionals or financial insurance brokers they have communications with, just so that as we grow, we all know our responsibilities change, the risks change. So we always have to keep covering those risks as they unfold on a yearly basis.
Excellent. Well, I've learned a great deal from you, Uchenna. Thank you so much for, sharing your pearls of wisdom where it concerns financial strategies and coming up with an individual wealth shield. That's something that I just learned from you today. So thank you for that. And where can people reach out to you to learn more, to connect with you on social media or maybe your website?
That's amazing. That's a great one. So I am reachable on LinkedIn or Facebook. And my LinkedIn name is Uchenna Opara. That's UCHENNA space OPARA. And it's the same for both LinkedIn and Facebook. Aside that, if you want to reach out to me directly through my phone number, I would call it out. It says 226-752-9670. So it's 226-752-9670. It would be a good way to reach out to me through text because I'm really open to having conversations. Yeah.
Excellent. Uchenna, again, it's been a pleasure. Thank you so much for spending time with us and helping us achieve our financial literacy goals. And please, those who've been spending time with us, reach out to Uchenna so that you can get the information you need to help you build your wealth shield. It's been a fantastic conversation. Thank you for dropping by at the Nikki Clarke Show, where we transform lives one story at a time. Thank you again, Uchenna. See you next time.
Thank you so much. The pleasure is mine. Thank you. Yes.
Bye for now.
Bye.